The conceptual framework of financial accounting is often seen in isolation from the broader field of financial accounting and indeed financial reporting. To help understand the link between the framework and accounting, one can consider the general journal. Before entering a general journal in the accounting records, the preparer needs to consider whether that general journal will provide information that has the ability to influence decisions of the users, as defined in the framework. Following that decision, the preparer needs to consider the recognition criteria. The first stage of the recognition criteria is to consider if there are elements present to account for. Assets and expenses to be seen on the debit side, liabilities and income and equity on the credit side. The next requirement to be considered is, are the amounts to be disclosed or presented reliably measurable? And then also to consider whether there will be an inflow of economic benefits or not. Should the general journal then meet all these requirements and be entered in the accounting records, the preparer then needs to consider if there's not any additional information that may need to be disclosed. For example, what other information will the investors want to know? If there is perhaps financing, is there information on interest rates or the period and term that may need to be known? In answering all of these questions, the preparer will at all times need to consider the qualitative characteristics of financial reporting. Is the answer to their question relevant to the users? Is the preparer able to faithfully represent this information? At all times, the preparer also considers the enhancing qualitative characteristics. For example, is the way that he has proceeded with this journal comparable to another accountant in a similar environment, in the same country, or even across countries?